Nvidia just did it again. But this time feels different. The numbers are so massive, so far beyond what anyone thought possible, that you have to wonder, did they finally break the market's brain? In their just-released Q3 results, the company reported a staggering $57 billion in revenue. That's not a beat. It's a total redefinition of scale, a 62% jump from the same time last year. The AI boom isn't just happening, it's accelerating at a pace that's creating its own gravitational pull. But with the stock's monumental run-up, is there any fuel left in the tank? What are the very real risks that Wall Street is whispering about, hiding just under these incredible headlines? And what does it all mean for the future of AI, the market, and your money? We're going to get into all of it. We'll break down the 4 key takeaways from this historic report, from the data center juggernaut powering this growth to the overlooked segments quietly becoming powerhouses, and the one major red flag that could threaten this whole story. This is the complete picture of Nvidia's Q3 earnings. Let's get right to it. For the third quarter that ended October 26, 2025, Nvidia reported a record $57.0 billion in revenue. This wasn't just up, it was up 22% from the last quarter and a massive 62% from a year ago. To put that into perspective, Nvidia added over $10 billion in revenue in just 3 months. That's more than the company's entire quarterly revenue from a few years back. This wasn't just a beat on expectations, it blew them out of the water. The engine here, as you can guess, is the relentless demand for AI infrastructure, with one segment in particular doing all the heavy lifting. First, the story that's dwarfing everything else, the data center. This part of Nvidia's business isn't just a growth driver anymore, it is the company. For the third quarter, data center revenue hit a record $51.2 billion. That's a 66% explosion year over year and makes up nearly 90% of Nvidia's total sales, showing just how central AI has become to its identity. This fire is being lit by the ramp-up of the new Blackwell architecture, with CEO Jensen Huang stating that Blackwell sales are off the charts. The growth comes from 2 areas. Compute revenue, mostly from the GPUs themselves, hit a record $43 billion. But the hidden gem is the networking business, which more than doubled to a record $8.2 billion. This shows Nvidia isn't just selling chips, it's selling the entire high-speed nervous system for AI factories. And while the data center grabs all the headlines, the rest of Nvidia's businesses are evolving into significant growth stories. Its original heart, gaming, posted revenue of $4.3 billion, up a strong 30% from last year. Professional visualization, tied to industrial digitalization, brought in $760 million, an impressive 56% year-over-year increase. Finally, automotive and robotics delivered $592 million, up 32% from a year ago, boosted by a major partnership with Uber to scale a large Level 4 ready mobility network. All right, we're about to get into the really juicy stuff: profitability, future guidance, and the single biggest risk facing Nvidia. If you're enjoying this breakdown and want to stay ahead of the biggest moves in tech, take a second to hit that subscribe button. We break down complex earnings like this every quarter, so you always know what's really moving the market. Raking in huge revenue is one thing, but turning it into pure profit is what separates the great companies from the good ones. And Nvidia isn't just a growth machine, it's a profitability machine on a scale we've rarely seen. For Q3, Nvidia reported a non-GAAP gross margin of 73.6%. Simply put, for every dollar of stuff it sells, Nvidia keeps about 74 cents before operating expenses. These are margins you'd expect from a pure software company, not one selling incredibly complex hardware. The fact that Nvidia can maintain margins in the mid-70s while growing revenue by 62% is an incredible testament to its pricing power. This profitability is converting into a tidal wave of cash. GAAP net income, or pure profit, was $31.9 billion, a 65% increase from last year, and GAAP earnings per share, EPS, hit $1.30, up 67%. The company generated a staggering $22.1 billion in free cash flow this quarter alone. To put that growth in context, cash from operations surged 41% year-over-year to $83.16 billion, and free cash flow per share climbed 38% to $3.17, showing an exceptional ability to turn revenue into real distributable cash. And what did they do with all that cash? They put it to work in two key ways. First, they returned a massive $37.0 billion to shareholders so far this fiscal year through buybacks and dividends, with another $62.2 billion still authorized for repurchase. Second, the company is investing aggressively into future innovation. R&D spending jumped 43% to $16.7 billion. Together, these numbers paint the picture of a company generating enormous cash today while simultaneously building the technological foundations for tomorrow, the strongest counter-argument to any AI bubble talk. Every incredible growth story comes with risks, and it's smart to look at them with a clear head. The major risk hiding just beneath these spectacular results is customer concentration. While Nvidia's customer base is growing, a huge chunk of its revenue is still tied to a very small number of massive customers. In a previous filing, the company revealed that two unnamed direct customers accounted for a combined 39% of its revenue. Now, Nvidia has clarified these might be distributors who then sell to cloud giants, but it highlights a key fact. Nvidia's fortunes are deeply intertwined with the spending plans of a handful of big tech companies. This creates a significant risk. If just one of these major buyers pauses or slows down spending, it could hit Nvidia's growth and fast. Any hint of a capex slowdown from the likes of Amazon, Microsoft, or Google could send shockwaves through the stock. Another related risk is geopolitical. Nvidia's guidance again assumes zero data center revenue from China due to US export restrictions. While the company has proven it can grow without China, it's a big piece of the market that remains walled off. Finally, there's execution risk. The company is managing incredibly complex supply chains, and some skeptics have raised questions about circular investment loops, where Nvidia invests in a startup that then uses the money to buy Nvidia's GPUs. These risks don't erase the incredible performance, but they add crucial context. This brings us to the most important piece of information for any investor: the future outlook. A stock's price is all about future expectations, and Nvidia's guidance painted a picture of sustained growth that is almost hard to believe. First, the short term. For the fourth quarter, Nvidia is projecting revenue of $65 billion, plus or minus 2%. The midpoint would represent another $8 billion in sequential growth and would be up 65% from last year's Q4. The company also expects its non-GAAP gross margins to tick back up to around 75%. This guidance blew past analyst expectations. But the truly stunning part was the long-term visibility. Management confirmed reports that the company has visibility on more than $500 billion in combined orders for its Blackwell and upcoming Rubin platforms, stretching into the end of calendar year 2026. This isn't just a forecast, it's management pointing to a massive backlog of booked business that could secure its growth for the next 2 years. And speaking of what's next, Nvidia isn't resting. The next-generation Rubin platform, set to ramp up in the second half of 2026, is expected to deliver another huge leap in performance and includes new Vera CPUs and Rubin GPUs. While Blackwell is still ramping, Rubin is already on the horizon, with the Rubin Ultra platform being targeted for 2027. This relentless annual pace is what keeps competitors struggling to catch up. So, what's the final verdict on Nvidia's quarter? Did it break the market? Yes. The results show the AI build-out is not a speculative bubble, but a genuine generational technology shift happening at a speed and scale we've never seen before. Nvidia's revenue isn't just growing, it's compounding at a rate that has forced every analyst to redraw their models for what's possible. The company has cemented its role as the central nervous system of this revolution. The data center is a beast with software-like margins, while gaming, pro-viz, and auto are becoming formidable businesses. The profitability is staggering, generating billions in free cash that's being returned to shareholders. However, the analysis isn't complete without acknowledging the real risks. Heavy customer concentration means Nvidia's fate is tied to the spending of a few tech titans. Geopolitical tensions remain a wildcard, and the scale of its operations brings execution risk. But the forward guidance and visibility into $500 billion of future business offer a powerful counter-narrative. Nvidia's relentless product cadence is designed to keep it one step ahead, making its platform a necessity for anyone serious about AI. For now, Nvidia isn't just participating in the future, it's building it. Thanks so much for watching. If you enjoyed this breakdown and want to stay ahead of the biggest moves in AI, tech, and the markets, make sure to like the video, subscribe, and turn on notifications so you never miss a future episode. Your support really helps the channel grow, and it lets me keep producing deep dive research like this every week. Let me know in the comments what company or earnings report you want me to cover next. AMD, OpenAI, Meta, Tesla, or maybe a full AI data center deep dive. I read every comment. This video is for education and entertainment purposes only and does not constitute financial advice. I am not a financial advisor, and nothing in this video should be taken as a recommendation to buy, sell, or hold any investment. Always do your own research or consult a licensed financial professional before making investment decisions. The stock market involves risk, and you should never invest money you cannot afford to lose.